Ever found yourself pulling your hair out when trading in ranging markets? I know I have. Most trend indicators go completely haywire when the market stops trending. They start flashing buy signals, sell signals, and everything in between, leaving your account balance in shambles. But what if I told you there's a trading secret that solves this exact problem? Something that combines trend analysis with volume to give you a crystal clear picture of what's actually happening in the market. I've discovered an absolute game changer. The Volumatic VIDYA Indicator. This isn't your average trend tool. It's a trading powerhouse that reveals not just direction, but the volume strength behind every move. Let me show you how this could transform your trading results forever. First things first, fire up TradingView and open any chart you want. I'll be using this pair on the 15-minute time frame, but this works on literally any market. Now click on the Indicators tab and search for Volumatic Variable Index. You'll want the version with Big Beluga. Once you've got it loaded, you're looking at what might be the most powerful indicator combination you've never heard of. The full name is a mouthful, Volumatic Variable Index Dynamic Average Indicator, but we'll just call it VIDYA to keep things simple. What makes this indicator so special? This isn't just another pretty line on your chart. The VIDYA combines dynamic trend analysis with volume confirmation, something most indicators completely miss. Let me break down what you're seeing. The color-changing trend cloud shows you direction at a glance. Green for bullish, red for bearish. Super simple. Those arrows, they're trend transition markers. Green up arrows signal the start of bullish momentum, while red down arrows warn you when the bears are taking control. But here's where it gets really interesting. See that volume data table? This is the secret sauce that 99% of traders are missing. This table doesn't just show random numbers. When the trend is bullish, it shows you exactly how much buying versus selling volume is happening. For example, in this bullish trend, we can clearly see that buying volume significantly outweighs selling volume. The delta volume percentage, that's your trend strength indicator. In this case, it's showing a strong percent in favor of buyers. These numbers only reflect the current trend phase. When the trend changes, the numbers reset and give you fresh data for the new phase. In bearish trends, your delta volume will be negative, more selling than buying. The deeper the negative number, the stronger the downtrend. In bullish trends, you want a high positive number. The higher, the stronger the uptrend. Before we jump into trading strategies, let's quickly optimize the settings for maximum performance. The VIDYA length setting determines your calculation period. A shorter length gives you more signals but also more false alarms, while a longer length smooths things out but might be slower to respond. Finding the sweet spot is key. The momentum setting affects how the trend cloud reacts to price, and the distance factor controls how far the bands sit from price, wider for volatile markets, tighter for calm ones. You can customize the colors too, but I'm keeping the defaults because they work perfectly fine. Let's move on to the money-making part. We can use this indicator in two completely different market conditions. First, trending markets. Second, ranging, non-trending markets. Let's start with trending markets, since that's where more indicators claim to work well. In a trending market, this indicator does two crucial things. It clearly identifies trend direction with the color cloud. It shows you strength through the delta volume. Check out this strong bullish trend. Not only is the cloud green, but the delta volume is sitting at an impressive percent. From my extensive testing, anything above 50% signals exceptional trend strength. You can still take trades at 30% or above, but the higher this number, the more likely your trade is to succeed. This number can theoretically reach 200%, though that would require an unbroken series of bullish candles. Pretty rare in real trading. Now compare that to this moderate trend. Still bullish, still moving up, but the delta volume is only this percent. This tells you the buying and selling pressure are nearly balanced. Trades in this environment will take longer to hit profit targets and are more likely to fail as the market could shift to ranging at any moment. My rule of thumb, when delta volume drops below 10% in what appears to be a trend, it's actually a ranging market in disguise. This insight alone could save you from countless losing trades. On the bearish side, we're looking for negative delta volume. This example shows this negative percentage value, which is a decent bearish trend. The more negative this number gets, towards negative 50%, negative 100%, or even negative 200%, the stronger the bearish pressure. If it gets closer to zero, the trend weakens. For example, if we play this section, you'll notice the market experiencing a pullback with more green candles appearing. This causes the delta volume to become less negative, signaling a weakening trend. Eventually, if this continues, it can indicate a potential trend reversal. Here's another mind-blowing application: trend reversal detection. Watch this market section closely. As more green candles appear during this pullback, the delta volume becomes less negative. This signals the bearish trend is weakening, often an early warning of a potential reversal. In bullish trends, when the delta volume starts shrinking, it's often time to think about taking profits. Look at this example. The delta volume gradually decreased until finally the trend flipped bearish. Now let's talk about something that's absolutely crucial if you want to succeed as a trader. The second market type where this indicator becomes your secret weapon: ranging markets. How many times have you been caught in a sideways market, jumping in and out of trades, watching your account balance shrink trade after trade? It happens to the best of us, but it doesn't have to happen to you anymore. Let me reveal exactly how to identify these pesky ranging markets using our Volumatic VIDYA. The method is simple but incredibly powerful. You'll use a combination of the trend cloud and the delta volume readout. Here's the golden rule. Whenever your delta volume reads less than 10%, whether positive or negative, and hovers near zero, it's screaming at you that the market is ranging, not trending. Look at this perfect example right here on my chart. The trend cloud is showing green, which would normally have you thinking, bullish trend, time to buy. And that's exactly what thousands of traders would do, especially if they're using basic moving averages. But that's a deadly mistake. Instead, check out the delta volume reading. It's sitting at just this value. That's way below our 10% threshold and practically kissing zero. This single number completely changes your interpretation. This isn't a bullish market at all. It's a ranging trap waiting to catch unsuspecting traders. If you jumped into a long position here, thinking the green cloud means buy, you'd watch in horror as price eventually rolled over and headed south, stopping you out and taking your hard-earned cash. That's exactly why this indicator is an absolute lifesaver in these scenarios. It keeps you out of these unprofitable setups. Now pay close attention to this next crucial point. Even when the trend cloud glows green, the delta volume could be positive or even negative. The key insight is that as long as this delta value stays under 10%, all the way to negative territory, the cloud color becomes practically meaningless. The market is ranging regardless. The exact same principle works in reverse too. When the cloud turns red, but the delta stays near zero and even goes positive, ignore the red color. It's still a ranging market trying to fool you into taking a short position. Check out this textbook example. The trend cloud is bright red, which would typically scream bearish at you, but look closer at the delta volume. It's this low percentage value, practically hugging zero. This incredible feature helps us see that this isn't actually a bearish trend at all. It's another ranging trap that most traders would fall straight into. Let me show you a deadly simple method to actually profit from all this knowledge. When you see the right setup, this can lead to trades that hit target in minutes rather than hours. For an ideal long trade setup, first make sure your trend cloud is glowing green, confirming bullish momentum. Next, you want to wait patiently for price to come back and retest the most recent pivot low identified by our VIDYA indicator. See that pivot right here? If we extend a horizontal line to the right, we can spot exactly where price is about to come back and retest this level. This retest becomes valid when a candle touches this level with its wick. It could be a green candle like this example, or even a red one. In this case, our retest candle appeared as a green one, making our setup completely valid. But if a red candle touches the level instead, don't jump in yet. Wait for the following candle to confirm by turning green before considering entry. Here's the final piece that separates amateur traders from professionals. We need to confirm the momentum is powerful by checking that delta volume reads 30% or higher. Look at our example. The delta is well above our 30% minimum threshold, giving us the green light to enter. From here, the execution is effortless. Enter your long position, place your stop loss safely below your entry candle, and set your take profit at double your risk. The beauty of this strategy is watching how price respects these levels like they're magnetized. Running this trade through to completion shows us hitting our profit target perfectly. The entire process boils down to these simple steps. Identify a genuine bullish trend with the green cloud. Wait for price to retest the most recent pivot low with a wick that touches but doesn't close below the level, and confirm strong buying volume with a delta above 30%. Do the opposite for short positions. I just revealed one of the most powerful indicators for trading both trending and ranging markets. All I ask in return is that you take 2 seconds to comment on this video to let us know which country you're trading from. Thanks for watching, and I'll see you guys in the next video.